Life insurance is one of the most important financial decisions you'll ever make. But for most people, it's also the most confusing. If you're living in the United States and you want to understand how life insurance works in simple, easy language, this video is for you. Welcome to Smart Life Insurance USA, and today I'll explain life insurance in America for beginners, the 2026 guide. No complicated words, no sales talk, just the truth. Let's get started. Life insurance is a contract. You pay a monthly premium, and in exchange, the insurance company promises to give your family a lump sum of money when you die. This money is called the death benefit. Your family can use it for funeral costs, paying off debt, rent or mortgage, children's education, monthly expenses, or simply continuing life without financial stress. Life insurance protects your family financially when you are no longer there to protect them. Life in America is expensive. Mortgage, student loans, medical bills, everything adds up. If something happens to you, your family may face big debts, income loss, high funeral costs, living expenses without support. Life insurance ensures your loved ones can continue life without financial disaster. That's why most Americans, especially parents and homeowners, buy life insurance. Term life insurance covers you for a specific period, usually 10, 20, or 30 years. If you die during that time, your family gets the money. If the term ends and you're still alive, the policy ends. Why beginners love it? Cheapest type of life insurance. Simple. High coverage for low cost. Perfect for families and young people. Example, $20 a month can give you $250,000 coverage. Whole life insurance covers you for your entire life, as long as you pay the premium. It also includes something called cash value, which grows like a small savings account. Benefits: guaranteed lifetime coverage, builds cash value, premium stays the same. Downside: more expensive than term, sometimes 5 to 10 times higher. Example, where term might cost $20 a month, whole life could cost $120+ for the same coverage. Most Americans use a simple formula: 10 to 12 times your annual income. Example, if you earn $50,000 a year, aim for $500,000 plus coverage. You can also base it on mortgage balance, number of kids, debts, future education costs. If you're unsure, start with $250,000 to $500,000, the most common range. In 2026, life insurance is still affordable, especially term. Monthly cost depends on age, health, smoking status, coverage amount, and term length. Example costs, approximate. Age 25 and healthy, $14 to $20 a month. Age 35 and healthy, $18 to $25 a month. Age 45 and healthy, $30 to $45 a month. Age 55 and healthy, $60 to $90 a month. The younger you are, the cheaper it is. The best time to buy life insurance is now, before you get older or develop health issues. Every year you wait, the price increases. And if your health gets worse, companies may even reject you. For 95% of Americans, especially beginners and families, term life insurance is the best starting option. It's affordable, simple, and provides high coverage. Whole life insurance is best for high earners, business planning, long-term wealth building, or people who want lifelong coverage. If you're unsure, start with term. You can always upgrade later. When buying life insurance in America, remember 3 things. 1. Don't buy more than you can afford. 2. Choose a trusted company, not just the cheapest. And 3. Buy while you're young and healthy. Life insurance isn't for you. It's for the people you love. If you found this helpful, subscribe to Smart Life Insurance USA for more guides, tips, and honest reviews. Your financial protection starts today, and I'm here to help you every step of the way. Thanks for watching.